Trading divergence is one of my favorite trading strategies because divergence strategy offer very reliable signals when combined with other indicators. Divergence can be used to know the exit point for trend following traders, but they can be used to trade the reversals also. Let's understand the most obvious question: what is divergence? A divergence occurs on the chart when prices and the indicator that we use are going in opposite direction. In normal conditions, the price and indicators should move in the same direction. You can see here that prices are going in upward direction and RSI is also going in upward direction. But when indicator and price action are out of sync, it means something wrong is there with the trend and needs attention why the indicator is not agree with the price action. You can see here that prices are moving in a downward direction, also RSI is moving in a downward direction. But see these two troughs. These are the troughs of the prices and these are going in downward direction. You can see they are going in downward direction, but RSI's trough is going in upward direction. So prices and indicator is moving in opposite direction. Similarly, you can see prices are going in upward direction. RSI is also going in upward direction, but when RSI is in overbought range, it means that prices are now overbought and we can see a consolidation in the prices. Also, we see the peaks of RSI. This is the first peak and this is the second peak. Peaks of RSI is going in downward direction, but if we see the price action on the chart, these are the two peaks and they are going in upward direction. So indicator and price are not in agreement and there is something wrong with the trend. After that, you can see that prices are consolidating here for some time and then we can see a retracement in the price. So when the troughs of the price and troughs of RSI are not in agreement and troughs of RSI or the other indicator that we use like MACD, stochastic, Chaikin oscillator, if indicator is going in upward direction, this is called bullish divergence and it signals that this downtrend may end now. In this case, prices are going in upward direction but RSI is going in downward direction. It shows that uptrend can end now and the downtrend is imminent, or we can say that retracement is imminent now because the price action and indicators should agree and they should move in the same direction. See, this is the hourly chart of USD versus JPY and here prices are in upward direction, but if we see the indicator, RSI's peak are going in downward direction. And see, MACD is also giving a bearish divergence because MACD is going in downward direction but prices are going in upward direction. It shows that momentum is low here. Now, as long as there are higher highs on chart, see this is the uptrend, there are higher highs and also RSI is going in upward direction. It means that trend is progressing. But when price is making a higher high and indicator is making a lower high, also MACD is making a lower high here, it means that recent price action is not as strong as the previous price action and trend is losing momentum. It doesn't mean that trend will reverse now, but it signals about the pause in trend. It signals that either the buyers are exiting from their position or sellers are getting in. Because you can see this is the strong resistance level for the prices. Here prices are taking rest on this line and now this peak is resisting the level. These two peaks are resisting the level. So here at this point, this level is acting as a strong resistance level. So near this level, we can expect a consolidation in the prices. At this point, bulls and bears are fighting with each other. If there is a fresh buying, then trend will resume its direction and prices will go higher. And if sellers are more than buyer, then trend will reverse the direction. So, when price and indicator are out of sync, it really requires your attention that something is happening on the chart and this is called divergence. As we already know, divergence can be either bullish or bearish. A bearish divergence forms when prices make higher high but indicators make lower high. You can see here that these peaks are going in upward direction. They are making higher high, but indicator is making lower highs. See, these are the highs, but this high is lower than this high, so these high are going in downward direction. Also on MACD, there are lower highs and going in downward direction. So this is called the bearish divergence and it signals about the end of the uptrend. And a bullish divergence forms on the chart when prices makes lower lows but indicator makes higher lows. Lows means troughs, so when we find a bullish divergence, we always see the troughs of the price and the indicators. See, these troughs are going in downward direction, but the troughs of RSI is going in upward direction. Also, the troughs or lows of MACD is going in upward direction, so this is called the bullish divergence. For good signals, at least one peak or trough of indicator should be in overbought or oversold region. It means that price is already in overbought range, and when price starts to lose momentum, we should exit from the trade and see the price action near the support level. See, this was the downtrend, so we will see price action at this level, and if we get a confirmation with the indicators, then we can exit from our old trade and make a fresh entry in the new trade. But for this, we should get a confirmation, and how to get confirmation with the indicators, that we will learn in the next lecture, how to trade divergence accurately. See, here is a signal of bullish divergence, and if we see the chart, this is a strong support level. You can see here prices are taking support, so this was the support level, and when prices reach at this level, at this support level, there is already a bullish divergence, so we can make our buying position. But for this, we should draw a trend line for this trend. That we will learn in the next lecture, how to draw these lines for the trend and for the RSI also. Thanks for watching. I'll see you in the next lecture.